So, welcome to Next Level Up. Most founders are happy to be toiling away with one new venture, but our guest today, Prashant Agrawal, seems to have said that's too easy. Let's build an entire ecosystem for founders to launch their ventures. Prashant, it's great to be with you. Can't wait to have this conversation.
Hey, thanks, John. Thanks for having me here. Always a pleasure to chat with you. And yeah, let's get this started.
So, before we talk about what you're doing today, we'll get to that. Our kind of, as everybody knows, is our segments start with a little bit of your origin story. So before we dive into that, let's start with the piece of shape that you spent about 2 decades in the deep end of banking. When you look back, what are one or two defining experiences that shaped how you build everything that you're doing today?
Sure. I think I would answer that question by going to my origins and my real origin story, which is before I got into banking.
Okay.
So I come from a business family. Generations of my family have been business owners, merchants, traders, going back to my great grandfathers. They were traders 200 years ago.
Wow.
So basically, business runs in my family and in the blood, in relatively and figuratively,
Yeah,
right?
yeah.
So that is my real origin story. I built my first business at the age of 17 with a little bit of support from a family uncle, and it did not go well, just to put it mildly, right?
Yeah.
And by the time I was kind of 18, I think the business kind of f fell away. Mistakes were made, money was lost, and
Yeah.
then I was at a point where, okay, what do I do with my life now? Because doing businesses and building businesses is all anybody in my family ever knew. So I
Right.
think that was the probably the first time in my life I realized, I have no other options. I got to go and find myself a job, and that's how I got into banking purely by accident.
Okay.
Started working in a small company, which kind of led me to another job, and kind of, found my way working into different aspects of banking, different departments, if you will, functions, if you will, different parts of the world, if you will, within banking. To answer your question, a couple of things that stood out for me and that kind of became cornerstone of what I do today during those 20 so years in banking was, of course, relationships with people and relationships with businesses globally, working with people in different cultures, in different countries, in different geographies, and understanding businesses from respective people's point of view and different cultural nuances point of view. I think that has become a cornerstone. And the second thing that I've also learned, I would say the hard way, is that all the relationships, all the businesses, everything has two sides to the coin. And the second side is the real commerce, the dollars and cents. All the relationships, all the cultural nuances, they are all one side of the coin. And the second side of the coin is everything eventually comes down to the real commerce, the consumer, the buyer, the user, the people who are building stuff and the people who are paying for it.
Yeah.
So if that makes any sense, I would say there are those two sides of the coin that have become sort of the cornerstone of everything that I do. One is people and relationships, and the other is commerce and consumer.
Okay, great. Uh, so obviously, when we talked, a lot of people were pushing you to start a fund. What kept you from that, future everybody else wanted you to do?
So I personally have had a lot of people come to me and say, "Why don't you start a fund with your experience and knowledge?" And I've always looked at starting a fund only as a format of investing and always as a vehicle through which money could be deployed in respective businesses.
Yeah.
But behind the fund or the mechanics of how a fund operates, there is always this very typical cycle of putting the money into a business and then running that cycle with a certain level of returns of investment, a certain exit strategy, and a certain, I would say, very templatized money in, money out. All the
Yeah.
LPs, all the GPs, they have to work with a certain formula, a certain framework for the entire machinery to operate. And because I have been a banker and because I have seen it firsthand very, very closely, I have not found myself genuinely interested in that side of the mechanics of the fund. Not because I can't do it, but
Yeah.
because I feel that for the larger good of the planet and for the larger good of humanity, that is not where I want to go. I genuinely, deeply am passionate about entrepreneurship and helping people build businesses. And building a fund necessarily is not the right approach that I personally feel is required. I do feel that I can add a lot more value by helping people build businesses, build solutions, build products, which would make a real impact in the world. And then, of course, I can use my connections and my capabilities to connect them with money as and where needed, wherever in the world it's needed. So, do I really want to start a fund? Probably not. Do I want to help people raise capital? Yes, of course, wherever it's needed. But bottom line for me is people should build tangible products which would make a real world difference.
Yeah. And for me, I heard a little bit of, it's always been a little bit of sterile, right? It's just a pure calculation. You either fit in, you don't fit in. And that really pushes some of those founders, some of those entrepreneurs into the margins where they would otherwise be overlooked. So I really love that you're coming more from the value and supporting entrepreneurs and then go find the money.
Absolutely. I mean, I was having a conversation earlier just this morning with somebody where we were talking about this infatuation, and I use the word infatuation very specifically with raising capital, right? I fully appreciate a lot of people wanting to get into entrepreneurship with the idea of becoming rich. And I
Yeah.
tell them, if you want to become rich, don't become an entrepreneur, right? Because if you want to buy a businesses, if you want to buy something, sell something, and gain margins and large profits out of it, yes, you can. There are ways to become rich.
Yeah.
Investing your money and investing into compounding products and compounding instruments perhaps can make you rich faster. Building a product and building a service and then looking at that as a vehicle to become rich maybe is not the fastest way to become rich. And there is this infatuation with VC because venture capital looks great in social media. Venture capital is what people talk about. Venture capital is where people look at it as, the claim to fame. When
Yeah.
you look at the Bay Area, when you look at other financial capital and financial hubs of the world, if you have raised capital, people think, oh, you have arrived in a certain way.
Yeah. Yeah.
So I I don't look at it as a measure of success. I do look at it as a measure of slavery, to be perfectly honest, because you are then slave to certain mechanics and certain rules and certain deliverables which are beyond
Yeah.
your control because you have actually ended up borrowing money under a certain type and a certain format
Yeah.
that you necessarily wouldn't have if you had your choice to do it. And because you wanted to become famous and you wanted to suddenly catapult in a certain scalability, you ended up
Yeah.
taking that money, right?
Yeah.
And I advise founders that if you can focus on generating revenue and building traction and use that to fuel your growth, you can avoid getting into that cycle of getting trapped into that infatuation in a certain way. So if that makes sense, that's what I kind of try and educate people with.
Yeah. 100%. It's almost like the correlation between payday loans as an individual going into a VC. Not that all VCs are bad, by the way.
They're not bad. I mean, I loved my VC friends. They do a fantastic job helping scale and take companies to the next level. I absolutely love that idea, and I think there are some VCs who are creating some genuinely good impact in the world. So I absolutely love that. I am more so concerned about founders and entrepreneurs running behind VCs and hundreds of thousands of these pitch competitions and pitches that happen to attract interest from VCs rather than focusing on building good products and building traction and revenue with the products. That's where
Yeah.
I find the concern, not the operating model of a VC. I mean,
Yeah.
once you have a couple of million ARR coming through your product and you need money to go from, let's say, from 10 million to 100 million, absolutely go and talk to a VC.
Yeah.
But unless you are at that point where your product is generating that ARR and that traction, spending all your energy just to, you know, attract VCs before attracting revenue, I think that's where I find it to be a little bit disingenuous.
Yeah. Yeah. I get it. One of my edicts is if you can provide value, the money will come. So I get putting the cart before the horse, so to speak.
Yeah.
Great. So let's move up to the current day here.
Mhm.
Uh, you're really building an entire octagon, right? Not just an individual company with BePacific, which, by the way, is one of the best word plays I've heard in quite some time. But when we spoke, it was clear that you have a real internal logic behind what you're building. So let's unpack that a little bit for listeners who, maybe have never seen someone build a multi-vertical platform with some kind of purpose in mind with you. So how did the pieces kind of interlock?
Sure. So I started building this product a couple of years ago to solve a problem for myself. That was the origin of this. So I would get a lot of people come to me and ask for help to validate that idea. And I would also get a lot of people, and when I say people, I mean specifically early stage founders and people who I call entrepreneurs who want to build a business. So they would come to me asking, is this a good idea to build upon? Is this a good idea to build a product on, et cetera, et cetera. So I started building this to solve my own problem, to save time in validating those ideas. That was the true origin of building BePacific. So we started building a tool, a platform where people could go in online, submit their idea, go through almost like a test, like an online assessment for about 10 to 12 minutes.
Yep.
And it would give them a structured report, which would tell them whether this idea is worth building upon, whether this idea is going to be successful, profitable, has a longevity, what the competition look like, etc. And that was the idea to behind the whole platform. And then we kind of connected the dots with investor side of the things, business assessment and investability assessment. So I think probably you said it better than I did, that we are trying to build that octagon where investment assessment, business assessment, starting off with the idea validation, and almost trying to build this ecosystem from idea validation to investability as a global unified ecosystem for any business anywhere in the world, backed up by a lot of data and science, so that we could make it easier for people to validate their ideas, test their ideas, validate their businesses, validate the investability capability, bring investors together and see some of these businesses which are worthwhile putting money into. That's the whole concept. So
Yeah.
I would say we are halfway-ish there, where we have successfully launched the idea validation platform. The business validation is also live, where there is a little bit of manual intervention involved. The investability assessment platform is in works. It's also available online, where there's also a human intervention involved. And then we are currently working and building the scoring mechanism where we are looking at completely changing how investors approach investability and founders approach investors, where we can do like an industry defining scoring mechanism
Yeah.
where it's almost like think about the triple A or a triple B rating. And if you've got that slapped to your business and it's almost like a badge, if you've got that, then you're already, past a certain level of credibility. And
Yeah.
if you have that badge, anybody anywhere should just write you a check.
Yeah. Yeah. It's like a instant vetting
Correct.
system, which is
Yeah.
great. So when we talked initial call, you said something that some people might find harsh, but I find is just honest and transparent, is that more than half the people who think they have an idea don't.
Yep.
So I would assert that your tool helps validate that. How how do you deal with, I wouldn't say you're necessarily dashing their hopes, so to speak, but it's that amount of reality. Like, hey, what you really don't have something yet, or maybe at all. How do you deliver that message?
So we try and keep it simple. The report that comes out at the end does say, so the assessment starts by saying, so it has a component where there is a question, just to give you an example, which says, are you ready to live without a monthly paycheck, for example, right?
Yeah,
It's one of the qualifying questions. If somebody says, no, I cannot live without a monthly paycheck, then it politely tells the assessor, the person, that, entrepreneurship is probably not suited for you. Go find a job. But at the
yeah,
same time, if you want to assess the capability of your idea, go ahead, take the test. And they go ahead with it. And at the end, it does say, while you answered, you should still look for a job, but here is the capability of your idea. That's the one sort of way we try and keep it polite and simple. But towards the end, even if the person has said that they can live without a monthly paycheck, and if the idea does not have very strong, let's say, legs and teeth, for example, it does say towards the end in the final report that there is only maybe a 20% chance or a 30% chance for this idea to become a successful product or a profitable product. Now, we don't control a person's respective endeavor if they want
right.
to go and build something which only has about 20% success rate. If they
Yeah,
want to go and build it, sure, go and do it, right? I mean, our hope, our belief and our hope is where people see longevity, success, profitability, sort of leaning towards 70-80% is where people will jump at it and go and do something about it, go and build on it. But where they see the profitability, longevity, success rates below 50%, they will rethink.
yeah,
But if they still want to go and do it, I mean, we are no one to stop them,
yeah.
right?
Right. They get to roll the dice if that's what
Yeah,
they're going with. But at
exactly.
least,
We keep it transparent and simple. It's their choice and their abilities to go do it or not.
yeah. But you're being clear about, look, it's almost like going in for a medical procedure. Yeah, this might save your life, but just be clear, it's a 15% chance. The other 85% you may die in the tail. It's not like, depends on what's going on. But I
Yeah,
get it. It's good that I get you guys don't make the call. You just inform.
yeah.
So what do you think is like what is the fastest way you can tell a founder is serious?
The fastest way as an individual, so the system, of course, goes through the assessment and towards the end gives a report, and then we leave it there. We don't pursue any further. If they want to go and build it, they do it. Then the next leg of that platform is you come back with a business assessment, right? We have observed that I think almost 70% of the people who have tried our system do not come back with a business assessment. So that is just one data point I can share with you that tells me that almost 70% people who went in there, played with the system, did the test, they do
Yeah,
not come back with additional information to validate their business model, validate their business and product capability, et cetera, et
yeah,
cetera. So to your point, that does tell me that maybe those 70% people were not serious enough, or they looked at the report and they're actually not building anything.
yeah,
So that's just one data point. The second is when they do reach out and when we work with them and we speak with them one on one or as a team, and this is sort of this next data point when we look at the investability criterias and the investment readiness perspective, and that's when we figure out a lot of people they haven't really built a product or they haven't invested in building a product. They are looking to raise money to build something.
right.
And this is what tells me, as an entrepreneur, as an investor, as a mentor, as a coach, as a former banker, that if you need money to build something, you're not really serious.
Yeah,
because you are then almost trying to, print money or grow money on trees
Yeah, exactly.
without really investing anything. Because yes, there was a time, maybe 10 years ago, where you could, walk into a cafe in the Bay Area with an idea in your head and somebody would write you a check. But the world
Right.
has changed since COVID, right? Money is definitely available to be invested, but the risk capital has kind of taken a considerable left turn. So there are some ideas which are definitely, uh, life-changing, for example,
Yeah.
where investors would be willing to invest money to go and build it. And there would be some very niche technologies in healthcare sciences, in
Right.
climate sciences, energy sciences, etc., where there will be some very specific investors, very specific theses where people will say, okay, this particular idea or this particular product is going to change our planet in a certain way, and I'm going to put money in it. But 99% technology products, which either exist or can be created
Mm.
without a significant impact to the world, those type of technologies and products need to be created first, and traction has to be built before anybody can put any money in it. And that's
Yeah.
where I see when people want money to build. And that's maybe a longer answer to your short question, that's what tells me that people are not serious about building. They just need
Yeah,
money.
I get it. It's a good red flag, right? It's like, what's your business? Unicorn breeding. That's what we do. We're gonna just magically
Yeah.
create this. I just need the 3 million, 5 million. So that's the red flag side. What are any of the green flags that tells you a team's worth your time?
Yeah, yeah, exactly. And I think what I've also seen is maybe again, I'm just building on that question of yours. What I'm also seeing is probably two slight extremes of the entrepreneurship spectrum. One is people who have had a career, have had jobs for many, many years, but are not have either left their jobs or unfortunately were laid off or unfortunately did not find another job and are not getting back into the workforce in a certain way, are looking at building a startup and then trying to raise capital in a certain way to be able to get paid somehow,
Right.
which is a very wrong notion, which is a very wrong approach to take. So I'm seeing that end of the spectrum as well.
Yeah.
And I try and educate them and I try and coach them in a certain way to say, hey, that is not the best way to build a business to try and indirectly get yourself paid because you may not be seeing it, but your investor can see it
Yeah.
and you will be called out on it at some point. So don't do
Yeah.
it. You are doing yourself a disservice. Go and build something. And on the other extreme, I'm seeing a lot of young people, very young people, getting sort of infatuated again with this idea of building a startup because they see all these media stories coming from the Bay Area and all over the world that they would want someone to give them a couple of $1 million to go and have fun without without a reasonable product or an idea. And I mean, I can give you lots of examples around that as well. And this is where again I have to tell them, show me the product, show me what you're building, instead of telling me why you need $10 million. I see you need $10 million, you're asking for it, but what are you going to do with it? Like, where is the money being invested? What have you built? So I'm seeing those two extremes as well come out quite quite a lot.
Yeah. I got it. Um, yeah, really good. Sorry, I got something in my head, but it won't further the conversation, so I'm gonna let it go. So let's look ahead to the future. Next couple of years. Again, we were talking even a little bit about my podcast, right? And I was telling you, I don't know, I'm throwing spaghetti against the wall, see what sticks somewhat. And your comment was, well, what's your why, right? That's really going to determine whether it sticks or not. And that conversation got me thinking is what do you think the why is, or what do you think founders should be doing centered around their whys and really getting radically honest to me about that over the next 2 to 3 years?
Sure. So I'll start with my why, and maybe that sort of helps steer this. So my why is genuinely help enable a million founders, a million entrepreneurs, or a million people over the remaining years of my life. That's
Yeah.
my why. Now, it could be founders, entrepreneurs, students, businessmen, investors. I want to genuinely impact the lives of a million people, a million individuals for whatever remaining time I have left in my life. That's
Yeah.
my why. And I know I'm not a great teacher. I know I'm not a great coach. What I am very good at is helping people understand commerce, understand commercialization, understand products and connectivity of that with consumers, right? So when I look at myself, I look at my top skills being commercialization, capital, fundraising, sourcing, procurement, and also I look at myself as a super connector. So where I see creating the most impact is helping people realize what their strengths are as when they are building a business and how they can do better in their business. To your point, when I am working with founders or investors, I try and help them understand and be honest with themselves. If someone wants to become rich, and I'll give you again a very recent example just from yesterday
Yeah.
or 2 days ago, where a group of young founders I was speaking with, three out of the five I was speaking with said, "We want to build a startup because we want to become rich."
Yeah.
And I was like, that's a great starting point. You want to become rich, but building a startup and trying to find an idea to become rich may not be the best place to start. You may want to you may want to find out what you're really good at, build your skills in what you're really good at, perhaps start a job, perhaps start saving some money, find a way to become very good at investing and compounding your investment. That may be a faster path to become really rich really quickly. That's just one of the examples. The second is find something which would really, really change our world dramatically, and you could scale that really, really fast. It could be something simple, but it could sell really fast, sell really well, and give you lots of money. That could be another way to become rich. So these are just examples. There was another fourth person I spoke with who said, "Oh, I don't want to do any of that. I just want to escape 9 to 5. I don't want to do a 9 to 5 job. That's why I want to build a business."
Yeah.
I'm like, if you want to escape 9 to 5, do you really want to build a business for it? Like, you could become anybody. You could become a painter. You could become a singer. You could become a dancer. You could become anybody you want
Yeah.
to escape 9 to 5. And then, of course, they went into a little bit more detail about the family background, etc. Everybody in the family has a 9 to 5 job. They didn't want to do a nine to
Yeah.
five. And I was like, so the point I'm making here is that if you want to be honest, that's the place to start. And if
Right.
you are not being honest with why you want to do something, that's when you get into all these different, I would say, intertwined, unclear pathways, and you lead into places you don't want to be at. So I think, again, perhaps a long answer to your question, I genuinely want to help people be honest with what they're doing.
Yeah.
Being rich or wanting to become rich, nothing wrong with that. You just have to find the right way, right? I mean, if you want to escape 9 to 5, there are ways to do it. You just have to be honest about it.
Yeah. I like being the artist part. That sounds like a much better. I'm not even sure. I mean, I'm sure there's more subtext behind the 9 to 5 because I'm like, I don't know, as an entrepreneur, 9 to 5 sounds pretty damn good sometimes.
Yeah,
Or
exactly.
always
Like,
on.
yeah, yeah. I
But
mean,
yeah, I
people
get
say I
it.
want to be my own boss, and I'm like, yeah, being your own boss has got nothing to do to building a company. You will not be your own boss. Somebody else will be your boss, whoever you borrow the money from. It
Yeah,
could be a
exactly.
bank, it could be a lender, it could be a VC. Whoever lends you money, that person is your
That's your
boss.
boss. Yeah, or it's the stakeholders if you get that big, or it's your
Exactly.
customers. I mean, technically it's never yours.
Exactly. And I was
But
like, if you want to be your boss, go open an ice cream shop. That's when you're a boss.
I mean, a lot of things for me feels like it's that future that's a little too self-centered. To your point, it's nothing wrong with it. not even making it wrong, but it's like, oh, the money, the freedom, the power. It's like, okay, again, you got to do the work and all that will come. You provide the value, that stuff will come to you.
Yeah,
Right there.
absolutely. Yeah,
So
absolutely.
last question I have about the future is we talked a little bit about, Toronto and New York and, it's not just the Bay Area anymore. Even we were talking about some of the work I'm doing with India, and I think you were as well. And the Middle East obviously has got a huge investment stream coming out of it. Where do you think the future is with just the world economy getting even smaller than it is today?
At least in the last 1 year, or perhaps a year and a half, what I have observed, and again, I'm not really a betting person, and
Yeah,
I'm not really political, but I'm simply saying this based on my observations. Uh, I, s- I foresee, I believe that the investments and the strategies which are being deployed by Middle Eastern countries, specifically the Saudi Arabia, the United
yeah,
Emirates, and the Southeast Asian countries, specifically Vietnam, Singapore, Taiwan, Malaysia, Singapore, Indonesia, some of these South Asian cluster countries, and I'm excluding India, and probably Bangladesh and probably Pakistan out of it right now, because their biggest problem right now is population and politics. So I'm excluding them specifically right now. But some of these smaller countries, the strategies they're deploying on technology and growth and adoption of technology, and some of the investment and growth strategies being deployed by the Emirates, I believe that they will become a powerhouse uh, in the nearer future to come. We keep talking about China and India in many conversations. They are already the two largest, most populated economies of the world.
yeah.
I I believe there is some kind of a bubble which will burst in these two economies.
Hmm.
One, because of the uncontrollable population.
Yeah,
Second, because of the uncontrollable inflation and pricing.
yeah.
People don't build, a lot of people who don't travel do not understand this. The cost of living in India and China right now is higher than the US and Canada and the UK.
Wow.
People don't understand this. I'll give you a small example. A pint of beer in a good hotel or a good restaurant
Yeah.
in India is about $20 today.
Wow.
And in China, it's about 18, $17, right? And this is just, I'm generalizing, of course.
Yeah.
I'm not doing an
Yeah. Yeah.
apples to apple comparison. I'm generalizing, of course, generalizing.
Yeah.
But just to give you a context, that when economies become too aggressively bold and too aggressively populated, and they are trying to compete in such a space, there are certain levers of the economy which get ignored. There are certain levers which are about to go unnoticed, and it will burst. Those bubbles will burst.
Yeah.
So I am not bullish on them particularly, but I have seen potential in Vietnam, Taiwan, Taipei, Indonesia, Malaysia, and I am, of course, very bullish on Emirates.
Yeah.
So, yeah.
Yeah. Great. Great answers. Well, I could talk to you for several hours, but at least this episode is coming to a close. Anything you want to say at the end? Either how people can if a founder seems like it might be a conversation with you, how they get a hold of you, or anything else you want to end the segment with.
Sure. First off, thanks a lot for having me here. It was always a pleasure chatting with you. Anybody who needs to, reach out, LinkedIn is the best way to reach out to me. My website also is connected to my LinkedIn. Just find me on LinkedIn. My messaging, I keep it open and free for anybody to reach out. Just connect with me on LinkedIn, drop a message. I'm very active and open to connecting and chatting with anybody. So that's the easiest and fastest way to reach out to me. Also, I would say that if anybody is building anything, if they are ideating and thinking about building a business, there is a link on my LinkedIn profile which says test your idea on Pacific Play. I would highly encourage people to just click on that link, go to that platform, test their ideas. It will give you a chance to see the strength in your idea and in your business itself.
Yeah.
And yeah, feel free to reach out anytime. Depending on the time zone, wherever you are, I should be able to respond within a day, and happy to have a chat.
All right. Awesome. Well, again, thanks for the time and look forward to getting back with you in 6 to 9 months here, how BePacific is growing, and wish you all the luck.
Thanks, John. Always a pleasure.